If you walk in to a McDonald's and they have an ice cream machine, it's like a slot machine just paid off for you, right? That's the odds of it happening and working. I mean, I'm used to going out there and saying, hey, what would you like? And by the way, we have no ice cream, so it's like part of their pitch. But
up and just kind of talk about what has been going on with the stock market. So as everyone knows, the stock market's been doing very, very well. We had a little bit dip yesterday. I believe futures overnight were pretty flat. We're seeing where they're opening up right now. We can kind of let Sodi chime in. But Sodi, do you have just a minute, maybe just kick us off with a little market update, what's been going on the last few weeks?
Yeah, absolutely. So, we've had a phenomenal summer. Everybody's kind of usually expects summer to be slow, but we've had a much better summer this year. We've seen June, July, and August, the market make new all-time highs. And, coming into September, we've seen a little bit of shakiness early in the week. So again, today we opened just a little bit lower. So let's see how the market carries on for the rest of the week. Again, if any analyst or any people that you speak to, a lot of people are very much surprised by the summer. And I think this kind of just shows that going into the fall, there is still a lot more price action. There's still a lot more movement on both sides that people are expecting. So I think it's going to make for a very interesting remainder of 2021. And, I wouldn't say that this is just going to be a simply up year, but I also wouldn't say that it's going to be a down year. I think it's going to make a fun one for a lot of people. Volatility is, something that we should definitely be expecting this fall.
Yeah, absolutely. And just like the Wizard of Oz, the Wizard of 1010 options trading is the man behind the screen. So if you ever want to meet Sodi, you're going to have to do it on another call because he's hiding back there doing his magical thing and trading stocks and making money for everybody. So with that being said, I know one thing that definitely drives the markets and a lot of people are paying very close attention to right now is inflation. So we've had a lot of talk about inflation over the last year. How is COVID going to affect inflation? How is the demand, supply and demand, and the lack of people going to work and all the supply chain issues, and how is all of this going to drive inflation, and ultimately how is that going to affect the markets, and how is that going to affect your life? But what I want to do is I'm going to share this came out this past week in the Wall Street Journal, and the Wall Street Journal is basically saying the White House more than doubles its inflation forecast in new update. Administration expects consumer prices to rise 4.8% in the fourth quarter from a year earlier, lifts projections for growth this year. So if those of you that are following inflation, it came out where the Fed was basically saying, hey, it's just going to be transitionary. The White House has been saying, oh, there's nothing to worry about. It looks like everybody's starting to talk a little bit more and kind of admit, hey, inflation is becoming a thing and it is rising. So Brad and Nick, I know you guys have some really good comments and opinions on this. Can you take it away for a minute?
Well, I can just tell you that I believe that some policy choices have really caused an issue. I don't see it going away. I mean, if we just watch the news today, they're saying inflation is not transitory. It is here to stay. Because what happened is when everybody was getting the free money, the enticements had to increase from potential employees. And so now the wages have gone up, right? Well, what people don't realize is that just today they're showing that people, although wages are going up, they actually have less money in their pocket. If you think about, if you spread 4.5% inflation amongst all the goods and services, and you add the increase like 18% increase in cars and homes and whatever, okay, and you have these specialty items. If you add that to across the board, people are going to have less money in their pocket, even though they're getting more. And you say, well, how are they going to have less when they're making now $20 an hour instead of $10 an hour? Look at all the prices that have gone up across the board in that restaurant, for example. You're paying for the ability for that person to get a higher wage, and that person getting a higher wage, it doesn't increase the amount of money in their pocket. It just increases the amount of money they're paying. So in turn, the employers are raising the cost of goods and services. And so if you thought you were better off, you're not. You're in the same place you were, or in more cases, worse. And I talked about, and another thing that's happening, look at what you're buying. For example, I was in line. You go get a sandwich, you go get a bag of chips, 8-ounce bag of chips, $1.49, 6 months ago. Today, it's not an 8-ounce bag of chips. It's in the same 8-ounce bag, but it's 7.6 ounces of chips for the same $1.49. A Big Mac is almost a half an inch smaller. Go look at all the products you're buying. It's less. A 24-ounce soda in a restaurant right now, or when you go to 7-Eleven or Circle K, it's 20 ounces. 64 ounces, 60 ounces. 32 ounces, it's 30 ounces. The prices are the same, but the amount of product that you're getting is less. We're getting cheated right in front of our eyes.
Yeah, I mean, it's I saw an article and they called it shrinkflation, right? Because the price is staying the same, you're just receiving a much smaller amount. So all the little dirty tricks that big corporations and I call them dirty tricks, but maybe they're just trying to hang in there and stay competitive. I mean, if prices, everything are going up, they got to account for it somehow. So it's going to be interesting to see how that plays out. Sodi, if you're with us, how much does inflation factor into your analysis of what's going on with the markets and what you expect to come up and things like that? Is that something you keep an eye on, or is that something that lags with the markets, or what do you think?
Right. So, I mean, I think, Ryan and Steve made a great point. It's just, when it comes to longer term analysis, inflation is something you have to keep in mind, because if, you're expecting, let's say, 7% growth over 20, 25 years on your portfolio with the standard market, and now inflation, back a couple of years ago, we were told inflation was 2% when it was actually 3 to 4%. And, now it's even higher. Those are things you need to factor into your long-term investments, because if you are expecting 7 to 10% a year, inflation is now 4 to 5%, even just taking that round number. Technically, you are only doing anywhere between 3 to 6% on your portfolio after inflation. And I think this is a fact that a lot of people don't understand, because, it's difficult, because people think, oh, okay, we're investing for the long term. Yes, you're investing for the long term, but are your returns outperforming simply inflation? Like, yes, down the line, you're, $100,000, maybe 150, 175, but what is the actual purchasing value of that $175,000 down 10 years? Most people don't understand that. So I think, people get caught up, invest for the long term, but terms like inflation, savings rate, risk-free rate are certain concepts that people are not familiar with. So for long-term investing, I definitely agree. Like, inflation is something that people should pay attention to. I don't think this is something where people should, kind of go out and fish for, risky investments just to outpace inflation. But I think it is something people need to be aware of to understand. Maybe there are certain times where, you need to let inflation come back down or settle down. You may have to wait a couple of years, but this may not be the time for you to kind of, play the safe standard game, where if you're in bonds, bond standard rate of return right now is 4 to 5%. That means you're breaking even at best over the long run. So it might not be better for you to just sit and put your money somewhere else, or, hold on to it for as cash to buy other opportunities if the market dips at some point. As a short-term trader, that's not something that anything that bothers me. But for short-term, it's just primarily, news-driven events. So you kind of want to be on the lookout of, okay, well, what is the news? If there are any other events like that can cause volatility. So that's something that I look out for. But as a long-term investor, I think it's something you should strongly consider for your portfolio, how you've performed over your past, in your long-term accounts, and what the actual inflation is. That I think that might scare some people into looking at their retirements and be like, oh, wait, okay, we need to have a better look. We need to have a better chat with our advisors, because, these are things that people are not really familiar with.
And Steven, if I could add something to that, the old stockbroker motto, right? Buy low and sell high, which really means buy whenever I told you about the stock and sell and never wear it. The stock market is the highest it's ever been. Is your stockbroker calling you to take some of your chips off the table? No, because they're never going to call you to do that. You have to call yourself to do that. You need It doesn't make any sense to have all these growth and be bouncing along the bottom a little bit here, a little there. I agree. Short term is one way, but long term, take your money. The gains that you might get by bouncing along the bottom are far less than the risk of a volatile market where something impacts it due to a potential policy or something unseen or we don't even know about, or a hidden agenda or a hidden vehicle like the MBSs back in the day. Why not just take your chips, put them on the side? America's going to burn a little bit. They're going to have to go through some tough experiences, but put your money on the side, safe harbor it, let the market correct itself, and find some opportunities that you want to jump in on while it's on the bottom, not while it's, banging along the top.
Yeah, I mean, in the real world application, like you said, I mean, it's a fine balance, because if inflation is pushing 5+% in the real world, maybe 10%, if your money's sitting in a bank, they're paying you in a savings account 0.1%. So you're losing money every single month. So you don't want to wait too long for those opportunities, but at the same time. So that's where more advanced strategies, things like infinite banking and what we do with money multiplier, a place where we can store our money, get a guaranteed 4% plus dividend return, and the money sitting there available for us when those opportunities do arise. So different strategies like that we can talk about, which is not what this is for, but I will mention it real fast. We are doing a live event in Las Vegas with the Fortune law firm. So with Brad and Nick here, where we're going to get into these exact advanced strategies, what you should be doing right now to not only have your money ready for the upcoming opportunities, but also protect that money, your wealth, and create that legacy for you going forward long term. So when is that coming up again, guys?
That's November 12th through the 14th. So the day after Veterans Day, which is November 11th. So it makes it for a nice weekend. If you do it right, you get to write the whole thing off, and we'll show you how to do it. But it's exactly what you talked about, Stephen, where we're going to preface. It's right at the time where people need to govern their portfolios correctly for the end of the year, and the education they're going to need for what we're going to face the following year, so that they can be good stewards of their cash and not find themselves the one without a chair when the music stops. We're going to give them the tools so that they can thrive going into the next year, and they don't have to be worried about what's going to come down. They're going to be prepared.
Yeah, absolutely. So there's a lot going on in the news right now. Let's see what you guys want to talk about next. Is there anything that you guys have seen happening that you want me to bring up?
Well, just going back to what you said about the inflation thing, I think that it's important to understand one part of the narrative is that when you go out there and you pay somebody that kind of a wage, you can't just fire them when things calm down, because that brings about lawsuits. I mean, it's here to stay. You created a new baseline. So people just need to start governing their investments and the way that they approach money and how they buy things in a different way. I mean, it's almost like a flashback to the 70s. I mean, wouldn't you agree? I mean, this is almost like reminiscent of Jimmy Carter. I mean, I know a lot of you guys are younger, you don't have gray hair and what have you, so you guys don't remember some of that. But prime plus 14, 16%. I mean, I'm kind of curious if Stoney thinks that we're going to see days like that ahead coming down the line, and how is inflation going to affect the stock market? How is inflation going to affect how we do investments? Is it going to create a new class of investments? And the need, especially to get out of capital gains, when they're talking about 39.6 and 42.3. That vehicle that you're talking about, Stephen, when you invest with that vehicle and the profits come back, they're free from capital gains. You need to find a vehicle that will protect you against the outlining taxes and capital gains that are going to come down the road. I mean, you need to start taking care and being wise and educating yourself on what's available, so that you don't have issues down the road where you get a surprise when it's too late and you don't know what the tax liability is going to be. You don't know what you're going to actually have to retire on. And that's a scary concept for, I know, a lot of people.
Yeah, it's a crazy world we live in right now. I mean, there's, the Middle East is going through a lot of changes right now. We have, states in the country with recall elections happening. people don't know if inflation's going through the roof or it's under control, if COVID's going to continue to crush everybody. I mean, I had COVID a few weeks ago. A couple of people on our team have it now. I think I've known about 40 or 50 people in the last month that have had it. So COVID's going crazy. Is it shutting things down? Are we staying open? Are we going to close down the economy again? Are we just going to push through? Like a lot is up in the air right now, and how that's going to affect your retirement accounts. So in my opinion, it's the best time in history. If you've never had a little, thing up your ass, say, let me go take control of my money. Let me find out actually, where is my money? Where are my investments? Is it a good time to have all of my retirement in a 401k controlled by some financial advisor that gets paid commissions by investing it into more stocks when the stock market's at crazy all-time highs and all the technicals and fundamentals are out the window? Like, is that a good time to be in it? Should I be following people like Warren Buffett that are selling right now and kind of getting out of those positions and getting ready? So what do you do? And to me, it seems like the best time in history to say, let me learn from people like Brad and Nick that know the strategies for saving on taxes, that know how money works. Let me learn from people like Chris Naugle and the Money School team on how to take back control of my money and change one thing to change everything. It might be a good time to start studying what the wealthy are doing. Where are banks putting their money? Where are people investing right now? We talk a lot about real estate investing, right? Is it a great time to go out there and buy a single family home when prices are through the roof? I mean, the real estate market's up 30, 40, 50% and higher in some of the country. So is it a good time to go do that? Or are we going to see a little bit of a correction, and are we going to see a downturn, and maybe affordable housing like in 08 is the place to be? When we had the collapse in 08 in the single family housing market, all of a sudden apartment complexes, mobile home parks, affordable housing, that's where the smart money was, because those things didn't lose value and those prices actually went up because people needed a place to live. So are we going to see a repeat of that? So maybe it's a good time to start studying and learning. So we have, we do multiple trainings every single week. So we want to thank everybody for being here right now, but we do multiple webinars every single week. And that's what we talk about all day, every day. So I know fortunefirm.com has some excellent resources as well. So get out there, educate yourself, and get prepared. But before we close things down, I wanted to bring up an article I saw last week that just made me laugh, because I swear my entire life since I was a kid, this has been being an ongoing joke, and it looks like the FTC is starting to take it serious. So let me share this article here. This was from the Wall Street Journal. It says McDonald's McFlurry machine is broken again. Now the FTC is on it. So let me ask this. Please comment in McDonald's if you've been to a McDonald's in the last 20 years of your life and you expected the ice cream machine to be broken. It's almost like when you go there, you expect to not get ice cream. So when you order and they have it, you're like, hallelujah, right? I mean, it's one of those things that you just never expect. So I just think it's interesting that the FTC is now investigating the broken machines. So what do you guys think about that?
Well, I love that this is a full circle, right? Because Ray Kroc is the one that sold that ice cream machine. Okay, he sold it into the McDonald's brothers, realized that they had a system and a process, and wanted to put his ice cream machine in there, but wanted the real machine was the machine of how McDonald's works, right? And so I think it's kind of full circle that we start off with Ray Kroc. Ray Kroc ended up taking away this enterprise from the brothers. And now the one thing that's going south is not McDonald's, it's the ice cream machine. I just think it's a perfect story. Maybe it's the end. It's the beginning of the end. Who knows? But yeah, you're right. I mean, if you can walk, like it's like hitting 3 sevens. If you walk in to a McDonald's and they have an ice cream machine, it's like a slot machine just paid off for you, right? That's the odds of it happening and working. I mean, I'm used to going out there and saying, hey, what would you like? And by the way, we have no ice cream, so it's like part of their pitch, but yeah, it is what it is.
Yeah, I just thought that funny. I mean, McDonald's, if you study McDonald's, like you mentioned, this history with Ray Kroc. I mean, first off, Ray Kroc started McDonald's using a privatized bank, using a specially designed whole life insurance policy, actually, if you didn't know that. So what we do with these specially designed and engineered whole life policies, infinite banking concept, and the money multiplier is exactly how Ray Kroc was able to really scale and launch the McDonald's franchises. So that's pretty fascinating. Number two, I've always thought McDonald's interesting because I learned When I was a financial advisor, just getting into entrepreneurship and real estate investing, somebody explained to me how McDonald's really makes their money. And it's not from flipping burgers. It is incredible, the systems that they have in place, the fact that they can hire someone right in high school, teach them the systems, and they're able to go in there and run these stores. Like, the efficiency of McDonald's is something to study in and of itself. But McDonald's also makes a lot of money, not from flipping burgers, not from franchising, but from real estate. Did you know that all of the property that McDonald's are sitting on, McDonald's owns that real estate? And not only do they own that, which, think about where McDonald's are in every major city, in every suburban location, in every rural area, on every street corner in the world, there's a McDonald's sitting there. They own the real estate. And a lot of times, not only did they buy that real estate, but they bought the lot across the intersection and across the road. And then they rented that real estate out to McDonald's and Wendy's, because they don't care about the competition. They know the real money's in that real estate. So a lot of lessons to be learned from Ray Kroc and McDonald's. And there's some great documentaries and movies out there about it.
Yeah, Founder is a great movie. It's pretty accurate when you read history in the book, but that's a great movie, Founder. So yeah, and what you're saying here, you're talking about the narrative. That's exactly right. As an investor, don't ever stop your education. Talk to smart people, read good books, listen to good talks, watch good podcasts, get that knowledge in your head and get enough of it that you'll start seeing a common denominator. You start listening to enough wise people talk, you'll get a good sense of where you need to be and how you need to be into certain investment classes. And I think that's the wisest thing you can do.
Yeah, I mean, and Chris is kind of chiming on the thing we were talking about with the gambling. He said he was on a private tarmac in Las Vegas. He saw several 747s and other large jets, all owned by the casinos. Why on earth does a casino need a fleet of huge jets? What does a 747 cost? Must be lots of people losing money just to fund that crazy fleet of custom painted jets. He was blown away. I mean, yeah, they're flying in the high rollers. They're flying them in. And
there used to be an airline company that you could fly into out of California or LA. They had 3 flights a day, a 6, a 12, a 6 in the morning, a 12, and a 6, right? Half of the airplane would be blocked off. You know what was in the back half of the airplane? Money. So rather than fly a half empty plane, they would fill it up with half seats and fly the money back and forth 3 times a day. So I believe in what Chris is saying, right? Vegas was not built off the winners. When they're flying your money in planes 3 times a day back and forth, that's a lot of action going on, I would have to say, right? So
yeah, absolutely.
All right, if you like that video, make sure you check out this video right now. And also, don't forget, subscribe to my channel, and don't ever forget to smash that alert button. We'll see you on the next one.